Good afternoon, and thank you for joining us today. If you were with us last week, you were introduced to the concept of commercialization drift, which is, if you'll pardon the hyperbole, the leading cause of business failure. It's a bit of an esoteric term, and I'll define it in a moment. But when you see a business fail, and you can say something like, they missed the market, or they took their eye off the ball, or they ran out of money or time, or they couldn't get any traction, and then they tank. That is a manifestation of commercialization drift. Today, we're going to look at a diagnostic tool that you can use to determine whether a business is going to go off the rails, whether it's going to fail. We're not necessarily going to talk about how to get it back on track today. We'll probably do that next week. Today is mostly a diagnostic session. And if you want to participate, or if you want us to diagnose your business situation in real time, just go to the link that you see here, leadgen.com live, and we'll bring you up on stage. By way of background, as you know, businesses spend enormous amounts of time, effort, and money trying to grow their sales, launching new products, investing in marketing, expanding sales teams, exploring innovation initiatives, and of course, serving their customers. Yet, despite all of that effort, commercial outcomes are amazingly poor. Products fail all the time. Marketing programs underperform, sales teams miss their quotas, and strategic initiatives stall with absolutely astounding frequency. As a result, though, jobs are lost, investments are wasted, pardon me, and what look like great opportunities simply die on the vine. So let's look at some evidence. Let's look at the screen. There we go. According to the US Department of Labor, about 25% of all new businesses fail within the first year. That's up from 20% a mere 5 years ago. So the business failure rate, the out-of-box business failure rate, is increasing faster each year. Over 50% of all businesses fail within 5 years, and over 65% of businesses fail within 10 years. In other words, long-term survival is rare. Less than a third of businesses make it past 10 years. And venture-backed startups actually show even worse outcomes. Roughly 80 to 90% of them ultimately fail. And they have some of the smartest people and more money than God helping them out. And even among the surviving firms, many businesses struggle financially. Over 2/3 of businesses today report having major financial difficulties. Amazingly, though, market demand and issues alone account for about 42% of business failures. If you want to look at it from the perspective of marketing program failures, here's the data. Only about 25% of marketing leads are qualified enough for sales engagement. 79% of marketing leads never convert to sales due to poor qualification or targeting. 94% of all trade show leads are never followed up. Typical e-commerce conversion rates are under 2%, meaning that more than 98% of visitors simply do not buy. They just visit or knock on the door. Cold email campaigns produce response rates of at best 1 to 3%, which means 97 and 99% failure rate. And even among opened cold emails, only 3 to 5 conversions occur per 1,000 emails sent. That's not closed sales. That's just conversations, and not necessarily productive ones. So what happens next? Of course, you get the finger pointing. Sales blames the marketing people blame the sales people, finance blames everyone, product development blames finance, and organizations basically respond by playing whack-a-mole with tactics. We'll talk about that a little bit in a moment, but results continue to deteriorate. In other words, if a large percentage of businesses fail, and they fail because they can't get their sales up, or they can't be profitable, or they can't gain market share, and you end up with finger pointing. So what do businesses usually do about it? So this is something that is called the tactical escalation trap. And it's just, what's the knee-jerk reaction that businesses have when they're not making their numbers? That is, when performance declines, organizations almost always reach for the same explanations, typically what you hear and what they do. So if sales says we need more leads, marketing spend increases. If the salespeople say the leads aren't qualified, the targeting models and the scoring systems are added. If finance says sales execution needs improvement, they invest in sales training and you get new sales leadership. Or if management says our messaging doesn't seem clear, so they invest in rebranding, positioning initiatives, and all sorts of other nonsense. If sales then comes back and says the product needs to be more competitive, maybe it's too expensive, so features and capabilities are expanded. Or sales says we need better tools, so they add CRMs or marketing automation and analytics platforms. Or they say the prices are too high, so you start discounting. Or someone concludes that the market is difficult right now, so you get strategy resets and new initiatives. But when none of this works, you have a systemic problem, not a functional problem. That is, when if sales says we need more leads, the solution isn't to spend more money on marketing. If that's the only problem you have, it may be. But when a lot of people are saying a lot of different problems are occurring, you have a systemic problem, not a functional problem. And my euphemism for that is this model. It's like the 5 blind men and the elephant. The marketing people think that sales can't sell. The salespeople think that marketing people don't know how to generate qualified leads. The finance people think that marketing and sales waste too much time and money. The operations people think nobody else is taking the job seriously. And leadership thinks that if they can just get people to do their jobs right, everything will turn around. But probably, they're all talking about different perspectives on the same condition. And it's probably not functional. It's probably not execution. It's usually structure. It's usually cross-functional or interfunctional. Okay, so what's the structure that diverging from is causing the problem? Give me 1 second. Sorry. A lead just came in and I don't want to handle it. How's that? Okay. So what's the structure that if we diverge from that, we have a problem? In other words, if it's not one function, if it's not just sales or just the marketing program or just the product problem, but if it's multiple things, what's the elephant in the room? What are these 5 blind guys actually looking at? It's not a tree. It's not a wall. It's not a snake. It's not a rope. It's something else. In our experience, not just experience, the research supports that. It comes down to the definition of a market opportunity. That is, it's not the go-to-market that's wrong. It's the who are we and why do we exist that are the problem. Or to put it another way, when you miss the market, right, that's what people talk about. We miss the market. It's usually because you took your eye off the ball as an organization, not as an individual or function within it. So what was that ball you took your eye off of? Well, that's the market opportunity itself that you see in front of you here. And yet we can talk about this in layman's terms. That is, so let's take a look at the structure of a market opportunity. Before I get into it, though, I need to make one thing clear. I've been working with this problem for 40 years. I got my MBA in marketing and strategic planning at Rutgers. I got a graduate certificate in strategic planning at Wharton, and I've worked with thousands of businesses over the year. The material that this comes from has been published pretty widely, and it's been tested over and over again with businesses that are in trouble and how to turn them around. And I can tell you one thing for certain. Other than maybe on day 2 of your intro to marketing course, they don't teach this in school, and you can't get a job in it when you come out of school. Everything in graduate school and business school, and your business courses, is within a silo, within a function. This is cross-functional, and that's why they don't teach it, right? But it is the critical path item when it comes to a business being successful in the market. So let's look at it now. It all starts with how you define an opportunity, because that's what motivates the formation of the business in the first place, of course. Somebody thinks there's a market opportunity, so it makes sense to define what one is. And interestingly, there's almost always clarity on this when a business is formed. That clarity disappears, though, very quickly. And again, we call it commercialization drift, and it's pernicious and it's often fatal. But somebody thinks there's a market opportunity, so let's define what one is. And just to look ahead a little bit, as I say, commercialization drift is when you take your eye off the ball, this ball in particular. Okay, businesses fail when they lose sight of the core market opportunity. Anyway, simply put, every business opportunity requires three things. It requires a product, it requires a defined need whose economic consequences justify purchasing that product, and it requires that there be a population that experiences that need that you can access. Or in paragraph form, a profitable market opportunity requires that a product or service be applied to a defined need that's experienced by a homogeneous segment of prospects that the organization can access and satisfy in a way perceived to be superior relative to substitutes. Remove any of these and you've got nothing. No market opportunity. If you can't access your prospects, you're out of luck. And think social media algorithms that don't let you get your message in front of audiences, or Google that doesn't let you have visibility beyond your local market. Right? If you can't access your prospects, you're out of luck. If they don't have a need for your product, you're out of luck. And we're going to define need. Let me jump ahead a little bit. When I talk about need, I'm not talking about a product. I'm talking about a need, pain, problem, or unmet goal. If the prospect does not have a problem that your product can solve, you're out of luck. And finally, if you can't satisfy that need in a way perceived to be superior to substitutes, you're out of luck. That's simple. You have to have a group of people who you can access, who all have a common need, one that you can address in a way that's perceived to be superior to its alternatives in order to have a coherent market opportunity. Try to address too many needs with one solution and you'll fail. If you can't reach your target audience, you will fail. If you can't satisfy their needs with a product that's perceived to be superior to its alternatives, you'll fail. And note that these are and conditions. You can't have one or two of these things. They all need to fit together. So let's take a look at some clues that tell you that something is wrong and things are about to go south. Okay. Again, we talked about some symptoms before. Here are a few more. For example, new products that miss their projections, marketing that generates activity but not revenue, sales teams that struggle to hit quota, strategic initiatives that stall, investments that tank. Okay. Revenue that stalls, excuse me one second, here we go. Revenue that stalls even while marketing activity increases, marketing that generates leads that sales can't convert, sales pipelines that appear full but win rates decline, sales cycles that grow longer and longer despite tools, AI, and automation, and marketing metrics that improve with impressions, engagements, or downloads, but revenue doesn't follow suit. Okay, those are clues that something's wrong. Okay, so we look at explanations that fall short, and then we'll get into the diagnostic. You can say, all right, fine, we can say things that make us feel better. Well, the market became more competitive, or the sales team wasn't strong enough, or marketing needs to do targeting better. We need more leads. The messaging needs improvement. Pricing is a problem. The economy is weak. Product needs more features. We need better. Fine, but it can't be all of these things. Right? That's the issue. If it's one or two, go for it. But if it's more than one or two, if it's 3 or 4 different things, you've taken your eye off the ball. So let's get into the diagnostic. So here's a little rubric diagnostic tool you can use to determine if commercialization drift is underway, if you're about to go off the rails, and your business is ultimately going to fail if you don't turn it around. And by the way, you're never going to be able to do just one thing to turn it around, because it's You have to deal with both the symptoms and the underlying cause. But if you don't deal with the underlying cause, no matter what you do to the symptoms, it's not going to fix the problem. Okay. So commercialization drift rarely appears suddenly. It emerges through subtle signals across the organization, precisely the kinds of things that we talked about a moment ago. If several of those conditions are present simultaneously, structural drift may be occurring. So the rule of thumb is if you have 2 problems, you can probably fix them. If you have 3 or 4 symptoms, that's a red flag, and you need to step back and reconfigure how you go to market. You need to get back to the basics of a product that satisfies an actionable need among prospects that you can access. You miss those, and there's no coming back from trouble. Okay, so signals can come from different areas, and you can look at the different functions within your business to try to identify whether you're going to go off the rails. From a product perspective, are you adding features in response to your competitors rather than because of a defined need or an intensity of the need that justifies adding those features? If you're in a Me Too situation, or if you're playing column fodder, that's a problem. Product capabilities that are described more clearly than their applications. So I need to define a term, and we do this in the advanced course, right? An application is the use of a product to solve a particular problem, right? If your materials are talking about the features of your product, it's faster, it's yellow, it's bigger, it lasts longer, and they have nothing to do in the mind of the prospect with the application. That is, if the prospect or customer isn't buying because it's red, they're buying, let's say it's a drill. They're not buying it because it's yellow. They're buying it because they need to fix a piece of furniture. You're on the wrong track if you're talking about the color. You're on the wrong track if you're talking about the speed. You need to be talking about applications. Roadmaps that are driven by the loudest customer rather than segment logic. One of the big problems that we see with companies that are having trouble is they'll have a sales funnel, and they'll define A prospects, B prospects, and C prospects. When Miller and Hyman first wrote the book Strategic Selling, they defined an A prospect as a prospect that's closest to closing. I can't tell you the number of companies that I've talked to who define an A prospect as their biggest, potentially most profitable prospects. Those are 2 entirely different things. When you do your funnel management and you prioritize big versus closest to closing, or stage of the sales cycle, which is the more accurate way to do it, you are headed down a drain. Signals associated with need. If needs are described in abstractions, things like efficiency or visibility or growth, rather than the underlying problem itself, like not my piece of furniture needs repair, or I need a tooth drilled, I have a toothache. If you're defining a need and in terms of an abstraction, such as an advantage, you're on your way to failure. Economic magnitude of the problem is unclear or assumed. If you can't define precisely what value your product delivers to your customers, you have a problem. If you have multiple different problems grouped into one narrative, you're on your failure path. In terms of segmentation, if you define target markets by demographics rather than shared needs, you're going to fail. One of my favorites, the idea of an ideal customer profile, is nonsense. Anybody that talks about an ideal customer profile in demographic terms is destined to fail, because what the commonality you're looking for among prospects is need. Is there a homogeneous group, or a group that you can access, have homogeneous needs? That's how you define a market segment. That's what you want to go after. You don't want to necessarily go after all contractors or all real estate agents or all manufacturers. What you're looking for is the problem, not the demographic, psychographic, or firmographic signal. So if you define ideal customer profile in demographic terms, that's a death wish. If you have win rates that vary widely across accounts, that they should get similar win rates, that's another signal that you've got a problem. In terms of marketing and sales signals, if your lead volume is prioritized over structural fit, that's a problem. In other words, if you say we don't have enough leads, or if you use something like, well, if you make 100 dials, you're going to get 10 calls, you're going to get 1 lead. Bad. There is no correlation, even though you might think there is. If you don't have the causation, if there's no correlation between activity, conversion, and closes. If you believe that there is, then all you're going to do is step up activity and generate more unqualified leads. If sales complains about lead quality, that's an easy one, right? The solution is not to score leads. Lead scoring is putting lipstick on a pig. If you have a problem with lead quality, you need to determine why, when you're doing your marketing and promotional program, you're not tapping into the underlying need that drives the requirement for your product or service. Again, if you're just getting howdy calls, if you're just getting demos that never close, if you're just getting door knockers or window shoppers, the problem is that you're measuring the wrong things. If your CRM tracks activity but not defined need conditions, here's the clue. Remember that the people that built Salesforce.com were engineers, not salespeople. Take that to the bank. Financial signals. If you're discounting the product in order to close deals, that's a big problem. That's a signal you're off the rails. If your customer acquisition costs rise across channels, that's a big problem. Forecast accuracy. If you can't get an accurate forecast out of your sales and marketing team, that's a signal that you're going off the rails. We used to call it the moving hockey stick. If you have a sales force and the time it turns up keeps moving to the right, assuming you're reading in English, right, you're going to fail. Okay. So that's the diagnostic. If 1 or 2 of these signals appears, the problem is likely just with execution, or it's tactical or functional, and you can probably fix it and move on with your life. If 3 or 4 of these signals appear simultaneously, the issue is unlikely to be tactical, it's likely to be structural, and you're going to fail if you don't fix it. If 5 or more of these things are happening in your company today, drift is already underway, you're in trouble, and you're in turnaround mode at that point. Okay. If you're lucky to be able to turn it around. In closing, right? Again, this is the structure that you want to get back to. A defined set of products that fits a defined need for a group of prospects who have that need that you can access. That's how you create the market opportunity. It has nothing to do with demographics. It has nothing to do with channels. We can get to channels and other things. In fact, I'm going to jump ahead a little bit if I can. No, not going to do it unless somebody asks a question. In our next workshop, we'll go into a little detail about how to structure market opportunity and how to maintain your fidelity to this architecture so that you don't suffer from commercialization drift and ultimately fail. If anyone would like to talk about the situation with their business, I'll hang around a couple of more minutes. Oops. The link to get to me on my calendar is leadgen.com calendar. If you want to jump on the call right now, on this workshop right now, and explore your situation with